Good morning, and welcome to your pre-market report for Tuesday, 21st July, 2026. Let's take a quick look at the global cues, domestic trends, and stocks to watch before the markets open. U.S. markets ended slightly lower on Monday as rising Treasury yields and elevated crude oil prices offset stability in AI and semiconductor stocks. The Dow Jones fell 0.6%. The S&P 500 slipped 0.2%, and the Nasdaq Composite edged down 0.1%, with investors remaining cautious ahead of a busy week of earnings from major technology companies, including Alphabet and Tesla. Energy stocks outperformed as oil prices remained elevated on ongoing Middle East tensions. Asian markets are trading mostly higher today as investors turned optimistic ahead of a busy week of earnings from major global technology companies, despite lingering geopolitical tensions in the Middle East. Japan's Nikkei has rebounded around 1.8% after the previous week's sharp decline, while Hong Kong's Hang Seng is trading marginally higher. South Korean markets remain supported by continued interest in technology stocks as investors look ahead to corporate earnings and the U.S. interest rate outlook. GIFT Nifty futures as of 8 a.m. was trading at 24,152, thereby indicating a negative opening for the Indian markets today. Crude oil prices are trading slightly lower as reports of possible diplomatic mediation between the U.S. and Iran tempered supply concerns. However, ongoing Middle East tensions and threats to regional shipping routes continue to keep a geopolitical risk premium embedded in oil prices. Gold prices are trading slightly lower as elevated oil prices have strengthened the U.S. dollar and reinforced expectations that the Federal Reserve could keep interest rates higher for longer. Even so, persistent geopolitical tensions and continued central bank demand are helping limit downside. Canara HSBC Life Insurance reported a strong first quarter, with annual premium equivalent rising 19% and value of new business jumping 29% year-on-year, reflecting healthy growth in new business. The company also improved its VNB margin to 21.1%, while maintaining a strong solvency ratio and stable policy persistency. Sobha delivered an impressive Q1 performance, with net profit nearly quadrupling to 50.8 crore rupees as revenue surged 50% year-on-year to 1,278 crore rupees. The real estate developer also announced plans to raise up to 1,000 crore rupees through non-convertible debentures to support its future growth. IndiGo has signed a landmark agreement with CFM International to purchase more than 1,000 LEAP-1A aircraft engines, making it the largest ever single order for LEAP engines. The partnership will also support IndiGo's upcoming engine MRO facility in India and strengthen maintenance support for its rapidly expanding fleet. Despite a positive open seen in most other Asian markets and muted crude oil prices, Nifty is expected to open in the red today, following a negative close seen in the U.S. Levels may therefore be adjusted downwards, with supports being at 24,125 followed by 24,050, while resistances may be placed at 24,210 followed by 24,300. A negative bias may be expected at open, with the index continuing to consolidate within a range. Indian markets may remain volatile as investors monitor the ongoing Q1 FY27 earnings season, elevated crude oil prices amid lingering Middle East tensions, uncertainty over the U.S. Federal Reserve's interest rate outlook, fluctuating FII flows, rupee movement, and global technology sector sentiment. Stock-specific earnings disappointments and any fresh geopolitical escalation could keep market sentiment cautious. Strong Q1 earnings from financials and consumption-focused companies, domestic institutional buying, continued government spending, healthy corporate capital expenditure announcements, resilient domestic macroeconomic indicators, easing inflation expectations in the U.S., and any moderation in crude oil prices or geopolitical tensions could improve investor confidence and support further gains in Indian equities. Yesterday, foreign institutional investors were net sellers of about 1,121 crore rupees, while domestic institutional investors were net buyers of around 1,312 crore rupees. That's your market snapshot for India on July 21, 2026. As always, don't forget to like, subscribe, and hit the bell icon for stock market related updates. Wishing you a focused and profitable trading session ahead.